Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, the bull market in equities continues, and actually leading stocks are confirming this uptrend. And what I'm referring to is, yes, the market does look a bit extended, meaning the S&P and the NASDAQ has gotten up to about 13% above its 200-day moving average, and usually at times like that we see corrections. Those both indexes, the S&P and the NASDAQ, have pulled away from their 10 and 20-day moving averages, meaning a little bit parabolic. And since the start of the year, we've seen really good market action, and it just melts up. So naturally, that's a time of concern, meaning did the market go too far, too fast, and we could expect a correction. And of course, last Tuesday, the futures coming into the market open last Tuesday, futures were up about 250, 270 points. The market opened up higher and just reversed in big volume reversal to the downside. So it did look like indeed we're starting to get a correction. However, one of the things that told us that perhaps the market will not correct and continue to move higher is the leading stocks. While indexes do one thing, one always needs to take a look at the liquid leading stocks. And what I mean by that is the stocks are doing very well that are heavily owned by institutions that are very liquid. So specifically, I'm referring to a stock like Netflix, symbol NFLX, pretty much continues to make new highs. Everything recovered off that Tuesday bottom. We saw the same thing on Google, symbol GOOGL. Also, looked like it was going to start turning down, reverse right back higher. We saw the same in Amazon, AMZN. Looked like it was going to maybe come down, had some selling signs. However, the rest of the week just reversed higher. We saw the same thing in NVIDIA, symbol NVDA, sort of the one could call that the Intel of these days. Also looked like it was going to start to turn around, break down, and of course just reversed. See the same thing in a stock like PayPal, PYPL, continues to make new highs. Now, even a stock like Facebook just looked like it's done for, meaning it dropped below its 50-day moving average right again this Tuesday, so it looked like the market was indeed going to correct. But what did we see? The stock reversed, reclaimed its 50-day moving average. Same thing we see in Alibaba, another liquid leader, symbol BABA, fell below its 50-day and then just quickly recovered. So when we see the big liquid leading stocks continue to do well, the market's probably going to do well as well. Now, will we get a correction? You don't know. You have to play it by day by day. But sometimes you need to look at what are the liquid leading stocks doing, and that may tell you what the outlook of the market is. Now, all the stocks I mentioned, we do own many of these. None of these are buy recommendations. You should always consult your financial advisor. These are just the stocks, though, you should keep an eye on. So maybe at worst, we'll move a little sideways from here, let the moving averages catch up to the price of the stocks, and we'll see what happens after that. But for now, the bull market rally continues, and that's a trend you don't want to fight until it breaks down. So, as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.